Good afternoon, ladies and gentlemen. Thank you very much for joining me today. I'm Allan Labucan. I'm the founder of the Allan Reports. And on today's show, I'm going to be talking about gold and gold stocks. The last time I did a video seems to have caught the bottom in the gold, and it's starting to move in a more positive direction pretty accurately. Before I got started, though, I wanted to mention a website that I've been spending a fair bit of time on lately. It's the chat.ceo.ca. I'm finding it as a really good resource. There's a lot of really sharp people in there, and there's really good back and forth on a wide range of topics. And I think what sort of brings everybody together is that we're all investors in there, and some really well-known newsletter writers come in there, some analysts. Tommy Humphreys himself is in there quite a bit, and I'm in there quite a bit, and I really enjoy the website. So if you could, if you're interested in sort of commentary that's going on live from me while I'm in there, check out chat.ceo.ca. I think there's some kind of time it takes to join up, but get on the list there, and they'll hook you up and get you in the chat there. So I got I wanted to get into more about my argument of why I'm so bullish on gold. I covered some of the key things last time in that, you see it throughout the sector, whether it's in the mining companies, you're seeing a significant drop in the head grades at most mines. If you look at the proven and probable reserves of those big mining companies, you'll see that those average grades are in decline. Exploration projects, by and large, are the average discoveries come down quite dramatically. An example of that is copper. When I got into the business, it was trading at about 60 cents a pound, and it got all the way up to, I don't know, $4 a pound or something like that. And so, it's there's lots of swings in these commodity prices, and I really think that with copper, for example, when I got into the business, you couldn't look at anything under 1% copper. Now, you're looking at 1/4% and stuff like that, and drill projects. And those can be developed in $5 or higher copper environments, but they're much more difficult to be where we are today with copper. But that's just an example of, again, another metal that's going through similar things where, in gold, 3 grams were, you didn't have 3 grams or better, and most people didn't pay much attention in the 90s. Nowadays, we're down to less than a gram. So on a lot of new discoveries. So, that's what we're seeing in the industry. There's weakness in the found gold. There's weakness in the mined gold and other commodities. There's weakness in the new discoveries. Yet you've got China and India as the big consumers of gold and other commodities. And there's a lot about their slowdown in their economy. They're printing millionaires very quickly over there, and as their economies are growing, they're consuming more and more gold. In fact, if they took off the trade restrictions to ship gold into China and India, gold would be a lot higher now. So now I wanted to go over a couple charts here. So I'm going to go into screen share, and you'll be seeing some charts from me for a while. The first one I wanted to bring up is gold. As you can see here, I'm looking at the gold price, and when it bought, this was about the time that I did my last show, somewhere in around here where my cursor is pointing. Here's what I was arguing for being the bottom in the price of gold. Why I was getting more excited is we were starting to see some higher highs, higher lows. Then we had some softness there for a bit. But what I like, as we come out of that softness, now we've got another higher high in there. The next big sort of place that I think a battle will be going on is in the price as it goes through $1,200. But I think to make that argument, I want to bring up another chart, which is the US dollar chart. This is the index of the US dollar, and I talked about this last time as well. Right when it was right about here, and I was saying that, I was seeing signs that it was looking like the trend is broken. This trend going back here, I'm going to spread this out a little bit more. So here's a 4-year going back to 2011. Look at this move from mid 2014 to early into 2015. That's a very rapid move when you consider that it's against all the major currencies. But then that trend was broken, and I think that this chart really shows how broken it is. Now, there's another point that I want you to be aware of, which is this sideways action here. This 94 level on the price of the US dollar index has been sort of, you can see I went back to a more shorter term chart. You can see every time it gets to 94, it seems to get some support. It got to 94 again just in the last couple of weeks, and it bounced off there pretty good. But I think that this trend that's been going on since, let's say, mid-March of 2015, is the broken trend has got more downside, and I think that the downside is going to pick up some momentum based on what I'm seeing with the charts here. So now I wanted to, so what I'm getting at is, if you look then, I think that this is the catalyst. The US dollar is a catalyst for most currencies to start gaining some strength again, like we've seen in the price of gold. As the US dollar's been under pressure, look at what's happened to the price of gold. It's taken off. I think that the US dollar has a lot more downside. It's now at that 94 critical level. I think that it's going to break through that. And when it does break through that, I think the next support is at around 90 on the index. And when it goes through 90, it'll get right back into that trading range around 80, 82, 83, 84, somewhere in there. So that's a catalyst that I see, and that to believe that this trend of higher lows and higher highs is, one of my favorite trends, because it tends to be a long-term trend. And I think we've broken the downtrend that had been going on for a few years this summer. And now we're heading into a more stronger trend for the price of gold. So the next charts I'm going to bring up are gold charts. These are a group of 10 gold companies. I'm going to try to work through them fairly quickly. I'll give you some of the highlights and then what I see in the gold chart. First company I'm going to talk about is Continental Gold. Their stock symbol is CNL on the Toronto Stock Exchange. They closed today at $1.73 on, that was down 1.7%. So they're a company with very high grade gold down in Colombia, and they had some trouble recently. Back here, if you see, the stock was trading at about $3. It got a significant haircut after they announced that the permits that they had been waiting on weren't coming through, and they were having to take a new route towards getting permits for the project. Colombia is not one of my favorite places to look for projects, but this company has a large following. It has a great project. I think it can be a trading opportunity, and this is the one that I think is creating a bottom in the stock here. I think if you can get it under $1.73 and maybe look for a spike back where you can get a 25-30% gain in a fairly short period of time, I think that CNL is one of those kind of stocks. The next company up is Eldorado Gold. Eldorado, oops, we're not talking about Wisdom Tree today. It's Eldorado Gold, and I'll just get the 1-year chart up for them. Eldorado Gold stock symbol is ELD. It trades on the Toronto Stock Exchange. Closed today at $5.02. That was down 2.52%. Gold was off today, and that's why the gold stocks were down. But that's why I like to do these shows, so the viewers can get in on the cheaper prices. But what I like about this Eldorado is a gold producing company. I think it was about 5, 6 years ago that they transitioned to a gold producer, and they've got some interesting projects. As you can see here, this stock bottomed in September 15th at $3.47. Since then, it has broken through the short-term 20-day moving average, the 50-day, the 100-day, and now it's sort of in that no man's land between the 200 and the 100. This one looks to me like if you can get it right around this $5 level, that I like this trend. As the price of gold is getting stronger, this company has outperformed the price of gold movement, and I like the higher highs and higher lows kind of action. Next company up is Pretium Resources, or Pretium. Pretium Resources is a company that I've followed quite closely for a couple of years now. Pretium has a very high-grade gold project in British Columbia. And a couple of years back, they got under some heavy pressure when one of the engineering firms that they had two engineering firms working on a resource or on a preliminary economic assessment, I believe it was. And when the one left, the stock got hammered all the way down to about $3.26. I was banging on the desk at that point in time. I felt that the one engineering group that stayed with the project knows what they're doing. They've been around for a long time. And my biggest argument for the company was they had a lot of drill holes out with lots of high grade in it, and that's the biggest thing I follow. Why I like Pretium is they've now got the funding together for them to build a mine on the project. I'd love to see this company turn into a mining company simply because it will be a low-cost producer and probably one that could get into production quite inexpensively. They've been on a nice trend since the summertime as the gold price started to get a little more firm. July 23rd, it was trading at around $5.81, traded all the way up to $8.97, so let's say $9. It's now come back. It's still quite significantly above that 20-day moving average and its longer term 50, 100, and 200-day moving averages. I think that this company is the kind of company that you could own for several years if they're not taken over. High-grade gold tends to be high-margin gold as well. And these days, a lot of gold companies could use some more high-margin gold in their portfolios. So Pretium could be one of those takeovers. I'm not sure, but I really like their prospects for the future. Becoming a low-cost producing gold mining company sounds quite intriguing to me. Next company up is Almaden. Almaden is a company that they've got good projects, but they've always been really horrible at promoting their company. But what I have seen is that I'm liking this bottoming formation that's happened here with Almaden. It's had a couple of bottoms in the summertime, and then since then it's been on a very nice trend upwards. When it hit that bottom, it was trading at about 65 cents. It's now trading at 78 cents. It's above the 20 and the 50-day moving average, sort of in that no man's land between the 50 and the 100. But I think it's going to be making a move towards that 100, which is at 86 cents. So I'm liking the upside potential on Almaden for a short-term trade. Next company up is McEwen Mining. McEwen Mining has gold and silver projects. They're actually a mining company and run by Rob McEwen. Rob McEwen is the guy who started Goldcorp. Their stock symbol is MUX on the Toronto Exchange. They closed at $1.25, down 1.57%. 1.57%. They bought it, and here's another one that bottomed in the summertime, and since then has been making a nice move up. It's now trading above its moving averages. I like this one's chances for a breakout. If I'm right and we get a good move on the price of gold, McEwen Mining will move up as well, because not only do they have gold, they've also got a lot of silver, and silver always performs well. So this is another one high on my list of sort of trades that I think could work out really well in the gold space in the next between here and the end of the year. Next company up is New Gold. New Gold is New Gold's a mid-tier producer, and I've been following this one for a few years. They've got a really marquee group of people running the company on the board of directors, some of the most high-profile people in the business, and they've got they're managed in a way that I believe is very aggressive, and I haven't seen a lot of aggressive juniors around or mid tiers around that really want to grow and to be much bigger producers. New Gold has production on a few different plays, and they've got a good pipeline of projects as well. This company is going to be around for a long time and growing. New Gold's stock symbol is NGD. It trades on Toronto, closed at $3.61 today. It's down 5%. Could be from a little more profit taking than the last few ones I talked about. Now this one has, again, here's another one. It bottomed around 270, 259, traded all the way up to 395, gave back some of those gains. It's broken all these short-term trends, and I think the next one it will break is the 200-day. I like New Gold for its management, that it's a mid-tier. I don't think that the industry has enough mid-tier gold producers, and that gives them a lot of opportunities out there. Projects that aren't big enough for the majors could definitely be the right size for New Gold as growth engines for their future. So New Gold's another one that I like. Next company up is Premier Gold. Premier Gold, anybody that's followed my stuff for a few years or since I started in 2010 knows that I'm a big fan of this company. I've featured it many times in my reports. They bottomed in the summertime at around $1.75, $1.69, and look at the move that they've made recently, blasted through all of their trading ranges and now on the upside. You know, I wouldn't be surprised if this one, you might be able to get it right around 265-ish kind of range, but they've got great partnerships. They've got a property that's going to partnered up with a major that's going to be a future mine. They've got real good projects in Red Lake, Ontario. That other mine is in Ontario as well, not up near the Geraldton Beardsmore district. Their projects in Red Lake are very outstanding, and so are their projects in Nevada. Premier Gold is run by Ewan Downey. Ewan is a very sharp guy. I've had a chance to interview and talk to Ewan a lot over the years, and I think that he's very focused on building a large gold producing company that will be around for a long time. PG is their stock symbol. They trade on Toronto. They traded down a penny today to $2.70, down 0.37%. So not much action today on a relatively soft day for the price of gold. The next company up is Rubicon. Now, anybody who spends any time in the CEO chat site knows that I talk a lot about Rubicon. There is a very big love-hate group out there following Rubicon. Rubicon is my top pick in the gold space. Now I started making that pick, I think, around 90 cents, and it's quite a bit below that. Today it closed at 61 cents. That's down 1.61%. The big drop off that was sort of comfortably above $1 for quite some time then. What happened here was they announced that they had to stop their milling, shut down their mill by the government, and the reason was that there was elevated levels of ammonia in their tailings, and they also had some water issues that they had to address. Now, there's been lots of talk. As you can see, the stock got hammered right after that news. Went from $1 where, like I said, it had spent the year prior quite a bit above $1, and got hammered down to as low as 58 cents. Why I'm bullish on the company and have been is I picked this company because I like the prospects of what their growth will look like in the first 5 years of producing from this mine. They're just in the early stages of putting this property into production. So they're going through some learning curves as far as I'm concerned. Elevated ammonia is not a big problem when it comes to bringing a new mine into production. That's one of the things that some of the commentators out there failed to identify. It also may not be that costly. And another concern out there when they announced this results in the or this news and the stock got hammered was the concern that they would have to fund some $2 to $10 million type of effort to fix the problem, and it seems that that has been greatly exaggerated, and the company feels that they have the money to cover this problem. My issue with this is not so much that it's a huge problem as far as mining goes. My problem with it is, and it's not even about how they reported it. My problem with this situation is that the company got a warning from the government in September 8th, I believe it was, and they weren't able to fix what is a fairly fixable problem in a mining scenario. To let it get to the stage where they were shut down, I think is inexcusable to the management. And I'm not too happy about the fact that when they booted the CEO out, they put in an interim person who had been there to be part of the problem as far as I'm concerned. But the ultimate problem I have with Rubicon is they're horrible at telling their story. And right now, the shareholders could use a better management that knows how to tell its story, plus knows how to fix these mining problems. I hope that there is a bigger shakeup in the management of the company in the near future. I think that will help them out. Still, I look at the current valuation of the company and I see a valuation of a couple $100 million, and they've got the potential of making that kind of money back in the first 5 years of producing from this mine. So I'm still a big fan of Rubicon. I own the stock. I bought more on the dip. I bought more at 60 cents. I bought more at 70 cents. My average price is about 75 cents on the stock. So I'm underwater on this one, but I haven't lost faith in the project. They drilled this thing extensively, and there is lots of high-grade gold in the system. They will figure out how to mine that high-grade gold, I'm certain of, and I think that when they do, Rubicon will be a turnaround type of a story, and that's why I like them so much. RMX is their stock, their symbol. They trade on Toronto. It closed at 61 cents today, down a penny, 1.61%. The final company I want to talk about today is Yamana. Yamana it's always been sort of the stock that is a good bellwether for me of when the gold sector is too oversold. You know, this company in the last 10 years has been as high as what do we got here? In the last 10 years, it's been as high as $20 a share. In the last year or so, it's been under a lot of pressure. It bottomed out there in the summer, in September. Since then, it's been since about the beginning of October, it's been on a nice trend, real strong trend. They've got a good portfolio of mines. They've got a good portfolio of projects in the pipeline. Yamana Gold has been around for a long time. They will continue to be around for a long time. This is another gold turnaround type story for me in the mining space. YRI is their stock symbol. They trade on Toronto. The stock was last at $3.12, so they're down 5.17% today. That one looks a little bit overdone on the downside to me for a short-term trade as well. So that's all the stocks I wanted to talk about today. Again, as many of you know, I'm very bullish on the price of gold. I've just put together a group of companies and I've looked at their technical charts and sort of given you my opinion of what I see happening with the charts. All of these companies I think are great candidates to perform well as gold gets stronger. I think the catalyst for gold to get stronger is weakness in the US dollar. And I think we're at that point where we're going to see more weakness, more downward trading days for the price of the U.S. dollar, and more up strong trading days for the price of gold, silver, other commodities. And that is a list there, a pretty comprehensive list of some of the gold stocks that I have a very high opinion of. On that note, everybody have a great day, and we'll talk to you soon.